A flash session's expected on the local market after Donald Trump offered a flicker of hope that a trade resolution could be found with China. After a rough finish to the week, it could be enough to keep investors in the hunt today. Sky News business reporter Chris Collers in Sydney with some details on the market open. Chris, how are we shaping up today?
Yes, look, it's been a bit of a lukewarm start for the local market this morning. Basically flat as a tack, 6,454 points at last reading. Now, financials down modestly. Telco's looking a little bit interesting after this Vocus takeover offer from private equity EQT Group. Telstra pushing a little bit higher, possibly on that news. Now, elsewhere, materials pushing quite a bit higher this morning too. So a bit of a mixed bag this morning. Now, for a little bit more on where to look and why we should be looking there, Michael McCarthy, Chief Strategist at CMC Markets, joins me now in the studio. Michael, thanks for being with me.
Thanks, Chris.
Look, where are your eyes being drawn this morning? How do you think we're going to shape up today?
Well, there's a lot potentially going on. And the immediate focus for traders this morning is, of course, on the results from the European-wide elections. These are quite important because we've seen record voter turnouts, the best in 20 years, and there's some suggestion that might see a swing to the extremes for Europe, which is generally not good for the economy. So the euro's in focus. So far, the results and the exit polls haven't reflected that, so we've got a fairly calm start, but it's going to be a key issue for markets this week. But, of course, the main issue this week for markets will be the trade talks. It remains the key determinant of market direction. We saw big swings last week on the back of headlines and sentiment swings around the trade outlook for China and the US. And with the US president in Japan this week, negotiating on trade once again, and, of course, the potential to drag Europe into discussions around Huawei, there's a lot going on. It looks like the trade dispute might be widening, and another reason to expect a cautious start from markets today.
Yeah, huge there, the international trade stuff around the world, just throwing investors around a little bit. But local in Australia, the local politics has certainly seemed to be a positive one for the Aussie share market. Last week, we hit almost a 12-year high on Wednesday. Does that say to you that the ASX is overvalued, or do you think that there's still some good hunting to be had?
Well, not at all. And in fact, for those who look at the charts, the signs are very positive. We've broken through, as you rightly point out, into blue sky territory as far as the market's concerned, and that suggests the risks for Australian shares in the short term are on the upside, not the downside. Now, interestingly, with that big spike up in the market, we also saw volatility lift. So confidence might not yet be there, but markets rise on scepticism, and there's certainly been some scepticism. I must say, though, last week we were really buoyed by a much more positive economic outlook. The return of the government means more certainty around the economic management of Australia, and that's generally taken as a positive by investors.
What about bad news being good news? I mean, Westpac now thinks that there's going to be 3 rate cuts this year. Can you tell us a little bit about how that plays out on the market, potential winners and losers there?
Well, low rates are generally supportive for investments and share markets, as we've seen over the last 10 years. But we remain in the middle of the biggest economic experiment the globe's ever experienced. And none of us can say with certainty how this will play out. But it's certainly the reaction last week indicates that more rate cuts will be good news for share investors.
Yeah, certainly. And the banks possibly in particular. I mean, since we saw the outcome of the election, the banks seem to shoot higher, bringing the whole index with them. Do you think that the outlook is particularly good there for those banks?
Absolutely. And that's one of the key drivers. And while many shares benefited from a generally more positive outlook, the banks in particular have good reasons to celebrate. The reality is that potential changes to negative gearing will now not be introduced. That was clearly going to be a drag on bank lending. And so with those potential reforms now off the table, there's specific reasons why the banks are being re-rated and could continue to be re-rated in the short term.
Yeah, we're seeing a bit of this. Some of the big analysts out there are upgrading the banks to outperform. Do you think that what you just said there is a good reason not to sell the banks or actually to go ahead and buy them?
Well, most Australians already own a large part of the banking industry, so I don't think it's a time to pile in. I do think the outlook is positive for share prices in the short term. I certainly wouldn't be selling at current levels. I think we're going to see further re-rating and further gains for share prices.
Interesting. Moving on, Michael, we saw a pretty interesting takeover bid launched for Vocus there. Now, look, just kind of without knowing too much about what's behind that or what's likely to play out there, do you think that after the election we're likely to see more M&A activity on the local market?
Oh, most certainly. The reality is we now know what the government looks like and we've got a good idea of their policies given we're looking at continuity rather than a step change. And so that gives confidence to those who are making deals with their eye on the longer term. And the 3-year political stability does increase the potential for further deals and further international buying of Australian businesses.
Really? Do you think that there are any sectors in particular that you think are looking at, potential takeovers or are potentially seen as takeover targets from local or international buyers?
Well, the long run and one of the key drivers of the Australian economy has been the engagement with China. Now, in the past, that's been based around our material stocks, and that's been a real positive for the Australian economy. But it's seen that will evolve, and in particular, a move towards technology and services for consumers could be the next wave of strong investment in terms of engaging with China in trade. So I suspect telcos will remain in focus, particularly given the competition rulings we've seen in that space. But there's also great opportunity for those consumer services groups to further increase their engagement and perhaps attract international attention.
Michael, potentially, and one more thing here, an area that's not looking so crash-hot, according to at least Morgan Stanley today, they're saying that the ASX, the stock that is, and Woolworths are both short-selling opportunities over the next 2 months. Do you think that that's right? Do you think that they're looking at a couple of hard weeks ahead?
Well, none of us know the future with certainty, Chris, but no, the indications to me for the broader market are that we'll see strength. Now, Woolworths is a special case because the reality is it's almost always overvalued when we compare it to the broader market. One of the reasons for that in the immediate aftermath of the GFC was the certainty of earnings that grocers bring, but we're well beyond that point. And I suspect that Woolworths benefits from the household name effect. That is, investors who are running their own superannuation funds know Woolworths, know the business and are happy to invest. And given we've recently seen Coles listed as a single entity rather than as part of the Wesfarmers Group, it might benefit from the same effect. So I'd be a seller of Woolworths only to buy Coles.